this week's market update, all eyes are on the G20 summit in Osaka. Fed policymakers are expected to cast further light on proposed rate cuts, and a steady stream of economic data is due on both sides of the Atlantic. The week's most important event doesn't even get underway until Friday, so a full week's nervous trading beckons before we find out if Presidents Trump and Xi have seen their way to an easing of recent trade tensions. The G20 summit in Osaka gets underway at the end of the week, with all eyes on a planned meeting between the leaders of the world's two largest economies. Trade fears spooked the market in the fourth quarter of 2018, provided reason for hope in the first quarter of this year, and have subsequently seen markets drift as the threat of tariffs has reappeared. It's clear, therefore, that the sustainability of the ongoing equity bull market will be determined to a very significant degree by progress, or the lack of it, on trade talks. A lot hangs on the chemistry between the two presidents this weekend. The initial signs are good. Last week, President Trump said he planned to hold an extended talk with Mr. Xi in Japan, and that officials would kickstart the talks ahead of their meeting. Also last week, Vice President Mike Pence said there were signs of progress in talks with China. That matters because the meeting is all that might prevent Washington imposing tariffs on another $300 billion of Chinese exports to the US. Talks stalled in May, dealing a blow to the market rally, which had boosted share prices since the start of the year. Before we get to the weekend summit, there should be some further insight into the stock market's other big unanswered question: the future of US interest rates. Last week, the Federal Reserve left US rates on hold, but there were broad hints in the Fed's wording and in the so-called dot plots showing rate setters' expectations that the cost of money will fall in America as soon as next month. Having started raising interest rates from their post-crisis low in 2015, the tightening cycle has come to an end, as the economic cycle seemingly draws to a close and attention focuses on the timing of the next downturn and how the central bank might prevent it. The futures markets, and to a slightly lesser extent the dot plots, now point to the next move in US rates being down from the current 2.25% to 2.5% range. This week, a number of officials from the US Central Bank, including Chair Jay Powell, are scheduled to make speeches which may shine some light on the Fed's monetary policy plans. James Bullard, he's the head of the St. Louis Fed, is due to speak. He was the lone dissenter from the Fed's decision to hold rates, arguing that the interest rate should have been cut last week. In that view, he has a high-profile supporter in President Trump, who's not pulled any punches in expressing his view of the Fed's handling of monetary policy. In a series of no-holds-barred tweets this week, he bemoaned the Fed's refusal to cut rates so far, concluding that they blew it. Last year, Trump described the Fed as his biggest threat and said he was not even a little bit happy with Mr. Powell. The expectation of lower interest rates, together with dovish comments from the European Central Bank last week, have helped drive stock markets higher. The S&P 500 hit a record closing high last Thursday as investors bet on a repeat of the late 1990s, when the Fed engineered an extension of the economic and stock market cycles, with a series of precautionary rate cuts in 1995 and then again in 1998. Other markets in focus this week are both gold and oil, which are following shares and bonds higher. Gold has enjoyed a strong rally, rising above $1,400 an ounce, as investors bet that lower US interest rates will see a decline in the value of the dollar. A weak dollar tends to push the gold price higher because it makes the precious metal cheaper to buyers outside the US. The rise of more than $100 an ounce in recent weeks has taken gold to its highest level since 2013. The metal's risen by 4.8% over the past 5 days, its best week in over 3 years. The other reason lower interest rates boost the price of gold is the fact that it's a non-yielding asset, which struggles to compete as interest rates on other assets rise. When rates fall, by contrast, the opportunity cost of holding gold reduces and demand increases for a commodity that has a history of performing well at times of economic and political uncertainty. Uncertainty is also driving the price of oil higher as tensions increase in the Gulf region, following the shooting down of a US surveillance drone by Iran and the apparent last-minute change of heart by President Trump against a retaliatory strike on Iranian assets. Oil rose by $4 a barrel last week to $65, off its recent lows, although still significantly below the $86 a barrel it reached last autumn. Supply remains plentiful, thanks in part to shale oil production in North America. That's kept the price subdued, but any intensification of tensions in the Middle East could see a much tighter market and higher prices. About a fifth of oil and a third of liquefied natural gas passes through the Straits of Hormuz, a narrow waterway used by Saudi Arabia, Iraq, Kuwait, the UAE and Iran. About two-thirds of that oil and gas is sold to the key Asian markets of China, India, Japan, South Korea and Singapore. Tensions in the Gulf have complicated the next scheduled OPEC talks due to take place in Vienna on July the 1st and 2nd. Despite friction between Iran and Saudi Arabia, the meetings are expected to confirm that production curbs by OPEC and its allies will be extended from their current June end date. Meanwhile, on the economic front, there's a steady stream of data announcements this week. In the US, the spotlight shines on the housing market, with new home sales and house prices due to be reported on. GDP numbers will be confirmed in the US, Britain and Canada. The US has inflation data on Thursday and consumer confidence numbers the day after. Corporate earnings are thin on the ground this week, but numbers are expected from a few high-profile businesses. FedEx, Nike, Walgreen Boots Alliance and Constellation Brands over the pond. Here we're expecting results from Stagecoach, Serco, Tullow Oil, Green King and Thames Water. Now, one market that's been off the radar for a while is cryptocurrencies like Bitcoin. However, the announcement last week that Facebook is in advanced plans to launch its own currency, Libra, has rekindled interest in non-traditional currencies. That's coincided with a resurgence of interest in Bitcoin, which rose above $11,000 a coin for the first time since early 2018. The currency started the year at just $4,000, but remains well off the high of more than $19,000 reached in late 2017.